Traders, if you go through my videos, the ideas that I've uploaded here in Tradingview, you'll come across the Euro Aussie. And we were talking about this video here, and we were talking about this price action. And I was looking for this trade to come down here, and we were looking for basically this to retrace back up into this imbalance. As you can see, I've got marked up here. Now, it traded into the imbalance, halfway through the imbalance, and I think this imbalance was a 30-minute or something. We'll go out and have a look, but I traded back into it, and then we were looking for lower high, lower low, that kind of thing, and the rotation to catch a short. And by that I mean, you can see this price action rolling over here, right? So that happened, and look, I'm going to have a look at the current price, and we're going to look for another opportunity. But I mean, that was a beautiful outcome. If you caught that trade off the last video I did. And look, here's another idea, guys. Don't chase this, right? It's getting away, but I'm going to delete all this, and we'll go out there, 4-hour chart, and work our way back. All right, here we go. This is in a really nice trend, and I'm always looking for this kind of price action. This is beautiful price action, guys. I love it. Look at the angle of the trend here. And, I'm always going to be looking for swing high to low, retrace, sell. Okay, high to low, retrace, sell. High, low, retrace, sell, and goes on and on and on and on. And occasionally that'll happen. Now we've had this move. See the imbalance? Well, you want to look for these gaps, so to speak, because the market, I'll just open that up a bit. The market is going to look to rebalance, generally speaking. See that? And it trades back into it, right? So now what we have is really the perfect situation to consider, okay, there's a thing, all right, there, high, low, retrace, sell. Okay, we've got a strong Aussie, we've got a weak Euro. The other thing you can do is you can open this up, delete that, and pull in the AXY over here, so the Australian dollar index. Over here, we'll pick up the Euro, the the EXY Euro index, and compare these two. So let's just do that, right? Now, I mean, yeah, look at these stop runs. That's really brutal. Look at them, okay? This is where they hit stops and pair their orders long. So the Aussie we can see is strong compared to the Euro. Euro's trending down. And, I mean, clearly, right? So you want to buy into strength, sell into weakness. So with that being the case, I'm looking for a Euro Aussie sell. But where? That's the question, right? So let's just open that back up and have a look at, my rule of thumb here, guys. Let's just go down and see what we got. 30-minute. All right, now we know what the 4-hour look like. What we can do on the 30 is just scrunch it up, and it gives you what the 4-hour would look like, pretty much. Now, I'm looking for, look at this price action. I love it. Okay. Rule of engagement for me at this point is, see this thin candle? Okay, we have this bearish imbalance from this range, from this value area. It's traded south with a vengeance. This coincides with this red candle prior to this bullish move here. Right, so I'm looking halfway into the imbalance. Midway through the imbalance would be an ideal potential entry point short. 30-minute chart. There's two ways you can get involved here. You can speculate and you could go with something like that, stop above the high, and you could target, given that this is already traded down, we have this range here, right? And the low of this range would be a target, given that there'll be buyers involved here trading it back, and there's going to be stop losses resting under. And so the market is always targeting liquidity. So we can set up, and I mean, I don't know, this could trade further south before we get a pullback. All right, so just watch that. But I would be looking at wherever this decides to land. We go down to a 15-minute chart, if you like. All right, at some stage, this is going to find its feet and work its way back, potentially. Now, not always, okay? That's what I'm wanting to see. Right, now here's the thing. Let's have a look at midnight New York. So we're just going to look at the trading, the open of today, the trading day. So today is Wednesday. Tuesday, we're looking for midnight. Okay, I would class this as the start of the trading day, midnight New York. And New York midnight, so that's 00, okay. 15-minute time frame. Where did this open? It opened right there. Okay, this is New York opening time. So we got midnight open price right there. You want to be a little bit careful with this. Yeah, I mean, look, we had Aussie data that came out, and that initiated this this move. We had a data release right there, all right, and so that pushed this. Excuse me, guys, I'm tired. Oh, okay, long days. That caused this to move. But look, here's the thing. You know, they they say the markets. Well, look, I won't go into it, but I honestly believe the markets are highly manipulated. Have a look at this price action leading into the event. It is incredibly convenient, right, for smart money. Incredibly convenient for smart money. We've got this event occurring here. The market ranges, and whenever you see the market ranging, this is smart money engineering liquidity, right? This is an ICT model, not my idea. Engineering liquidity, insofar as they manipulate retail and institutions, right? Here's the thing. This move here entices sellers. Stops pour in above. As soon as that moves down, okay, we have stop, and all through this range we have stops building above. We have traders looking at this thinking that this is going to roll over, you know, and they're going to be short. All right. Now this move here is a deliberate. The algo prices this down. It creates more liquidity. And look what happens here. See, all these stops get hit. This is a stop run. Watch this. The range, building liquidity once again. They push it down with a vengeance, deliberately enticing sellers in. More stops go in. These stops get taken out, spikes up, they all get hit, and then we get the move. Right, smart money, then, you know, you're going to see this pull back, right? But you know, big money has to have this kind of price movement to be able to pair their orders, to be able to get involved in the market. They're moving at a lot of capital. They can't just jump in here and go, oh, look, I'm going to short this. No, that doesn't happen. They've got to work these levels. All right? Don't tell me that insider trading doesn't exist. So, you know, they know exactly what's going on, in my opinion, right? In my opinion. And this is engineered to suit them, and and then it shorts, right? Now, they unload, or they, well, unload down in here. So let's just have a look left. Target these lows, liquidity target 1. Let's just go back out again. All right, now look, this might be controversial to a bunch of people, and you know, you don't agree and you're cranky. That's that's completely fine with me. You can't convince me otherwise, guys, that these markets are highly manipulated. Right? So the idea, you know, for me, my thing with this is, well, do your best to recognize these footprints and ride their coattails, pretty much. How convenient is it? It is doing this right into the event, and then, you know, down it goes. So where else from here? Let's just back out of here a bit. I'll just clear the decks. I'm looking for an entry, and you want to consider a couple of things here. The market, it seeks liquidity. It's looking for liquidity. It needs liquidity to function, right? Now, you want to ask yourself, at the current price level, where is their liquidity? Well, down through here, right? You got a ton of traders short, stops galore, all through this area, everywhere, stop losses. That's ripe for the picking. So that's one thing. It's hunting liquidity, and the next thing is it needs to rebalance. So we have this imbalance, I should say. We have this imbalance. This one-sided trading here, bearish imbalance, right here. And a target from my entry point is going to be, there's going to be two things that I'm looking for. If my bias is bearish, the first entry point I'm going to look for is for this to trade back up into this imbalance, and you know, you'll see it higher highs, higher lows, right? That's how the chart will play out. And then I want to see it rotate and break market structure, lower highs, lower lows, right? And then, you know, that's your opportunity then to get short if you're in front of the chart and you're watching it. So that's idea number one, or that's my criteria number one. If this happens to, let me just back out of there, continue to trade through the imbalance, then the next port of call is going to be this green candle. Well, this value area that we're looking at, this whole balance area up in here, right? We've got this bearish order block on the 15-minute chart. So OB, 15M. Okay, order block as in institutional orders. Down it goes. And I mean, you know, only big money can cause the market to trade like this. Okay, that's a huge amount of capital involved here that's causing this candle to expand like that. So if it trades through the imbalance and doesn't hold and rotate here, my next port of call will be this order block here. So, okay. Second thing, then I'm looking for, if it's still trading north, higher highs, higher lows, I want to see the rotation happen here. And then it starts to head south, break of market structure. Simple. Really is simple. It doesn't have to be complicated. That's my second port of call. You're always waiting for that, the rotation to occur, if you're in front of the chart. Of course, the other thing is you can speculate and throw in a limit sell and hope for the best. And, that they usually work out, well, mostly. But, you'll get taken out every now and again. Here's the thing. If this gets traded through, right, so the imbalance gets traded through, this order block gets traded through, the next port of call is going to be a liquidity run. Right, my bias is bearish, given the strength of the Aussie and the weakness in the euro, right? So the next port of call will be these buy stops, right? So then it doesn't rotate at this imbalance. It doesn't roll over, at this order block. It's still going, right? That's my next port of call. And then you want to see the break of market structure here and enter short. So if you're in front of the charts, you want to watch this into, we've got the London Open, then we've got the Asia close, and then we have the New York Open. All right, so you might want to watch this for a potential pullback into the New York Open. Let me just undo a few drawings here. In fact, let's just clear the whole thing. So, look for, let's just have a look at this. Okay, we've got midnight. That's our day, the open of the trading day. And then we've got, let's just call it 3 a.m. London market opens. Okay, you want to mark this up, guys, and watch this. If you're going to be in front of the chart today, London session open, right? That's at 3 a.m. New York time, right? So we've got down here, click, okay, UTC4 New York. Set it up to New York. It's easier that way. So we're looking at 3 a.m. London Open. That's now. It's trading down into the London Open. This is a potential buy opportunity, guys. Potential buy. We want to see it trade back into the Asia close at 5 a.m. Right, now we're looking at the ICT kill zone here. So Asia close, 5 a.m. 5. Okay, this is a 15-minute chart. And then, so I'm thinking, we might see this rotate here. Okay, you could go for a buy if you wanted to, take the risk. It trades back up into the imbalance and these levels that I talked about. And then I'm going to be looking, I think, for the short at, let's just mark that up, at the New York Open, potentially. New York session open. I don't want to make this complicated, guys. Let's just keep it simple, right? New York session open. Let's just go down to a 5M. All right, so we have these times marked up. Potential move back into the order. The imbalance one. The order block here on the. We'll just mark these candles up. So let's just call it resistance. We'll do that. So resistance down here. All right, and the liquidity above. So let's just grab that liquidity pool. All right, so there's three areas where this could potentially pull back into and rotate, or three levels. So we got kind of midway through here, we'll call that level 1. We've got this order block, that's the second possibility, and then we've got these stops that are sitting up above the range here. It could spike up into that, that's a possibility as well. But we just wait for the rotation and then we catch the rotation. Like, see this for example, see here, we've got this shift in structure as I'm speaking. This higher high possibly is setting up, right? Changing character, possibly. Higher low, all right? So then, you want to watch this now to potentially trade up, come back and create a higher high, higher low. Anyway, however it kind of works its way, but I think that's the kind of thing that I'm looking for through this time period. And if this continues, like we've got this shift here, if this continues up, there's your break of market structure, BOS, and possibly a buy opportunity on that if you want to be, if you're game enough. But I'd be more inclined to look for the break of market structure on this direction, wherever it happens, right? And catch the short, right? So however it works, and then stop above. Well, you could go above this previous high over here and then go for a 2R, but look at the range. What do we got? Okay, we've got this range here. That would be a target down in here, just the low of this range. Right, that would be a target. So let's just map it out. You want to plan it out, and we've got a full, the London session. We've got everything in front of us, and a perfect opportunity to catch a Euro Aussie if it sets up in our favour, however it works, right? Now, I would go for probably this target here. That's a wide look. Wherever this rolls over, just go above the previous high. So if it happens to roll over here, for example, just keep a fairly tight stop above the high. You see it break structure, right? And then that gives you, there's a 2R right there. And look for this low. You could take partial profits off at this level and pull your stop loss to better than break even and go for broke. I mean, I really think this is going to tank somehow, but, that's my take, guys. And I hope it wasn't too overwhelming, but look for the setup. Now, look, if this happens to roll over around here and it does that, I'm going to let it go. I'm not interested. I want to see it trade back up into here. Right? I would rather let it go. I don't want to chase price. And I mean, look, here's the other thing with this, just to wrap it up and to, have a look at this fib, high, low. You want to get this to trade back into the equilibrium. See this 50% here? And you want to be getting short above the 50% of this price range, this high, this swing. All right, that's my bottom line. That's my threshold. I don't want to get involved. It's like you want to buy at a discount or sell at a premium, right? So, you want this up in this premium range up in here. And if it doesn't trade back there, then, walk away, guys, and look for another opportunity. Anyway, that's the Euro Aussie. And look, I've been studying ICT since 2016. So these are not my ideas. They're ICT concepts. I'm trying to simplify something that could be fairly complicated. Just keep it simple. And yeah, that's my interpretation and simplified version, okay? All right, guys, look, I hope you have a great day. Safe trading. Comment. It'd be great to hear from you, and I'll see you in the next video.